Good afternoon, everyone. Welcome to Hit the Bid here on September 21st. This is Ty Robbie here with your Week 38 Market Watch. Today we're going to be running through our charts and seeing what happened across these markets from the last week. We did see equity markets continue to push up into new all-time highs following the Fed's rate cut here on Wednesday. And we saw a nice steady week in the cattle markets as both fats and feeders balanced out in some key support levels, which is a good sign. So good action last week should be setting us up for some good opportunities as we move into week 38 here. So let's jump right in and get started. For starters, we got our December live cattle on the board. Last week we just saw a nice steady range trade with this market trading back and forth here in about a $5 range between this 231 and 236 area, continuing the range from the prior 3 days of the prior week. This market opening up on Monday with a hot start here, pushing above that Friday's high, but failing to get any follow through as it was a pretty light volume trading day. Prices did flush all the way back down here near these range lows, but we continue to see the buyers get aggressive down here in the low 230s, continuing to defend that 230 mark. And we did see Thursday and Friday's action here with some good, nice strong finish for the week, which should be setting the bulls up for a nice run as we move into week 38 here. So nice strong finish here, pushing this market back up here. We're trying to retest that Monday's high, and good accumulation here over the last couple days of the week, showing like the buyers are starting to get aggressive here, and we could start to see this market move higher after a nice steady couple weeks here trade. If we take a look here on our intraday charts, we can see Monday's action open up and making a nice run up there to that weekly high right around the 236.5 mark. Price did stall over the next couple days here, pulling back and all the way down here towards this 231 mark. We did see a test of that 231 level here on Wednesday and Thursday, but definitely met with some aggressive buying activity here as the bulls are really aggressive down here in the low end of this range over the last 8 or 9 days. Nice pushback here by the bulls, continuing to defend the key level. And Thursday and Friday's action pushing up here towards the top end of this range, with Friday carving out a nice little area here, really high concentration of volume filling up here between the 235 and 236.5 area. This is exactly what we wanted to see. This is a great finish for the week here. Good concentration of buyers up here, showing that we're starting to get the bears rocked back on their heels here. And if the bulls can get some bids above 236.5 here, we should see all the shorts in this market start to fold, and could really springboard this market into a nice trend week here in week 38, and see this market start to trade back up into the 240s and even potentially back up into those all-time highs. We still do have a nice range here between this 230, 231 at the low end of the range, and this 235 to 236 here at the top end of this range. If we don't get those early bids above 236.5 to start the week, we could see this market continue to trade back and forth across here. We just want to make sure that the bulls continue to defend this 230 mark, which is really closer to the 231 area here on this December contract, but that 230 level being the low over the last couple weeks here is the last line in the sand here for the bulls right here at this 50-day moving average. We want to make sure the bulls continue to keep this market above this level, and should be smooth sailing higher for them. So we just want to make sure the bulls continue to hold this range, if not get some bids above that 236.5 level, and see this market start to climb out of here. But just want to be urging caution. If we do start to get offers below 230, that could open the door to another wave of selling here, kind of push us back down here into the 220s. But with how we finished the week, that doesn't seem like much of a concern, and we should see this cattle market continue to climb up into some new high area as we head into the fall here. So look for these cattle prices to keep on cruising here back up into new all-time highs. We can go down the line here, and we're seeing nice steady supportive action here on these back months as well, all the way out into summer 2026. Really solid action here out into those back months, looking like this cattle market's going to remain healthy and strong here for the time being and here into the end of the year. So pretty solid supportive action last week, over the last couple weeks here. Be looking for these fat prices to continue climbing. Same story over here in the feeder market. October feeders continue to trade in about a $10 range here as the volatility is still a little bit higher up here at these record prices, but good supportive action here over this $10 range here between 345 and 355. Last week we saw a nice strong day here on Monday, pushing up here on the top end. A brief breakout attempt here on Tuesday, but just couldn't really get that momentum to follow through. We did see over the next couple days this market come back down here, retesting that 347 to 350 area. Good accumulation of buyers coming in down here near these range lows. Buyers getting aggressive down here around the 347 mark, continuing to push this market off of those highs as the bulls are really defending that 345 level and this rising 50-day moving average. Like those fats, we want to make sure that the bulls continue to hold this market above 345. We could see continued range trade here, but until we get offers below 345, we should see support continue to hold in this market. Nice strong finish here as well, though. We did see this market finishing here with some good buying activity here across Thursday and Friday's action, pushing up on the top end of this range, really putting the pressure on that 355 level. As we can see here, also a really nice concentration of volume here at this 353 to 355 area. Real sharp edge here being drawn right around that 355 line. We should see this market get some bids above 355 and 356. Should open the door for the to the 360s and potentially some new all-time highs. But last week, this is a real nice finish to the week by the bulls in this feeder market. Exactly what we wanted to see moving into next week. We should see some good buying activity by the bulls resume, see that momentum carry here into Monday's action, and have a pretty nice strong week as they turn this market around. Good supportive action here in this big picture uptrend right at all the rate levels here. Look for bids above 356 and 355 to carry this market back towards those all-time highs. Feeder and fat markets both looking steady all the way out here into the end of the year and into those spring and summer 2026 months. Good steady action here all down the line. Looking like the bulls still have the wind at their backs, and we should continue to see higher prices here as we move into the fall and end of the year. So look for cattle prices to keep on climbing. Next up, we got our December corn futures on the board. Pretty uneventful week in the corn market. We did see pressure being put up on that 430 level, but bulls just really couldn't get the ball rolling through that gap. If we look back here, the 4th of July weekend was where we created this breakdown gap here from the 430 to about 433 level. We have had made a couple attempts at it here, one back here on the 18th of July, and then over the last 2 weeks here, we've made multiple hits on this 430 level. But bulls just not able to get the traction they need. Bears remain strong here at the 430 mark, continuing to provide resistance at this gap. Bulls just really couldn't get the momentum going there. We still are trading above our major moving averages, so this is a bullish sign, and we do have a potential uptrend still in the works here in this corn market. However, at the moment, we've had a nice strong push off these contract lows at 392 all the way up to 430. Looking like the bulls were just kind of running out of gas here at the moment, just couldn't quite keep this steady grind up. Looking like we may need to kind of dip back here into these supportive moving averages. If we can see the bulls come in and offer some good support in this 415 to 420 area, we could be picking up some of those value area buyers that we need to get another run at this 430 level and potentially push it through this gap and get this big picture uptrend rolling once again. But in the meantime, look for this 415 to 430 range to continue trading here. We do have a nice big cup here forming here over the last couple months, and might just need to see a little bit of a shallow dip here into these moving averages and retest the epicenter of this WASD report breakout. We can see here from last Friday that WASD report that pushed us out of this range and right back to this 430 level. Kind of the epicenter of that move was right here, right around the 420 mark. And so we might need to go back here and see this market pick up some more buyers down here. Could give them the strength they need to make that last run at that 430 level and get that breakout up here above it. Like we've discussed over the last week or two, 430 on this December contract has been support over the last year, and now that we're trading below it, it's acting as really good resistance, just kind of a key concept of markets, just prior support now becoming resistance. So we want to make sure that we're respecting that level until we can get a nice strong close above it and fill that gap. From there, we should see this market trade back up towards the 450 mark, and we could see a nice smooth sailing above that gap if we can get some bids above it in the week ahead. But in the meantime, look for this market to continue balancing out here and maybe picking up some value area buyers down here in the 415 to 420 area. But the bulls are going to need to make another run up there at that level to get the ball rolling higher. So in the meantime, remain patient, look for some value areas to play, and or just to wait for that breakout to confirm a new uptrend from here. Oil prices continue to trade here in the low 60s. Not a whole lot of excitement in this oil market. Very little volatility here, and not much to be expected going forward. Last week we saw this market just kind of trade back and forth here in a pretty tight range here between about 62 and 65. Not a whole lot to be excited about. We did roll over into the November contract last week, so November is the new front month here on this crude oil market. We did see a brief test of that 50-day moving average, putting pressure down here on this market and selling it back down here towards the 62 mark. We continue to hold this range here, and we expect to see this range continue to trade going forward. Bears need to get a breakdown of the 61.5 level here to get a flush lower. If we do get some offers and a daily close below the 61.5 level, we could see those mid 50s become a new target here. Could open the doors to some selling pressure down here into the 50s. Which is probably the most likely course. If we aren't going to stay in this range, the most likely direction is going to be lower. Very little upside potential in this oil market at the moment. Look for the range trade to continue sticking around here in the low 60s to mid 60s, but offers below 61.5 could open the door to trading down into the 50s. So as far as the directional trade, that's about the best bet we got at the moment. But in the meantime, look for this market to continue trading in the real small ranges and very little volatility. Slow bleed is kind of going to be the most exciting action here if we do get that break below 61.5. So in the meantime, just kind of hang steady. There's better opportunities in this market than the oil market, so go ahead and steer clear of that one until we can get a nice directional move underway below that bear pivot. And last but not least, moving into our equity indexes, we did see a nice strong push up into new all-time highs for each of our indexes last week. Nasdaq pushing up there into nearing the 25,000 mark. Nice strong finish on Friday. And the Dow being the weakest of the bunch, just kind of hanging steady here. But we did see new all-time highs printing there on Friday. Really solid breakout here from the multiple levels on the Dow. Nasdaq is right back into new all-time highs, showing that the tech sector is back into its nice new uptrend after spending a couple weeks here balancing out. And the S&P also just continuing to move higher. We can see a lot of these gaps are just created from the rollover into that December contract. That really isn't much of a gap there. That's just a September to December contract gap here. We can see this December contract here without that gap. Good supportive action last week. We did see this market continue to climb. Wednesday's rate cut, we did see a little bit of selling pressure come into this market, but it was quickly bought back up. Really a nothing day there on following the rate cut, finishing the day unchanged, and then just open the door to smooth sailing as long as we're trading above 66.60. So as we can see, bids above 67.20 bull pivot. We should see this uptrend just continue to grind higher. Stay invested, stay long. Look for this market to continue cruising. Not looking like there's much reason for volatility or downside at the moment. A soft Fed. It's rule number one: don't fight the Fed. So we've got a Fed cutting rates here, so should be a pretty smooth sailing to higher prices. Could be seeing S&P 7,000 here before the end of the year. So look for smooth sailing in these equity markets. Stay long and strong. Any dips should be expected to be good buying opportunities, so keep an eye out for deals out there. But we should see these equity markets continue to push up into new all-time highs. Last but not least, we do have a couple news events for the week. Nothing major. We do have Fed Chair Powell speaking there on Tuesday afternoon. Other than that, we've got some GDP and jobless numbers here coming in on Thursday morning before the bell, the opening bell, that is. Outside of that, very little to be excited about. This market is just going to keep on with a nice low volatility grind. Very little news events very little excitement expected from those news events. So should be smooth sailing going forward here. Look for higher prices across the equity markets, cattle markets. Corn needs to get that breakout above 430, but no shortage of opportunities waiting for us in week 38. So we'll catch you guys tomorrow for closing comments. Hope everyone had a good weekend. We'll see you tomorrow.